Futures trading versus options trading, that's what I want to talk about in this video, and specifically the big difference between these two. Now, yes, there's many other little differences, but in my mind and through my experience, what I'm going to show you here is a really big difference, and it's something that you should definitely be considering when it comes to your approach to the market, your strategy, and whether or not this is going to make a difference. So on that note, I also want to be fair. I'm not here to say that options are better or that futures are better. I just want to show a difference, and then it's up to you to, basically figure out, okay, does that difference even matter to me? Now, before I can get into this, I need to set up a little bit of context here, and it may seem a little goofy, a little irrelevant, but I promise it will make sense as I get to later on in the video when I show an actual trade, and then you'll be able to see how what I explained in just a moment actually does play an important role. Now, the key distinction here is that options are dependent on something else. Usually that something else is a stock, but it could be a variety of other things. So right here we have, let's just call it SP. So we have the stock price. And then over here, we actually have what we'll call the option price. And this right here is what you would actually care about. That is what you would buy an option for. But the option price is dependent on the stock price and what the price is doing. So again, an option depends on something else. In this situation, the option price, because it's a stock option, is depending on the stock price itself. But what goes on here is where things get very squirrely, and that is this blue line here. And this blue line is what represents, we're going to call G for the Greeks. And the Greeks, without going deep down the rabbit hole of mathematical formulas, but they are indeed mathematical formulas that are influencing and distorting and doing all sorts of things before you actually get to that final options price. So going from the price of the stock to the price of the option, because of those Greeks,
this is nasty.
Things can get ugly, things can get confusing in a hurry. So in a nutshell, there's not any sort of clean line. Things get blurry, things are not black and white because of the Greeks and how they can influence the price. And like I said, I don't want to go down those rabbit holes, but if you already trade options, you know exactly what I mean. So you don't have a black and white situation because there's actually two prices. There's the price of the asset itself, and then there's the price of the option, which again, depends on what's going on with the price of the actual asset. But now let's talk about futures. So right here we have FP, the futures price. So what is the price of the future? Well, and then that's all we have. There is no Greeks, there is nothing else. The futures price, well, it is the futures price. There is nothing else that you have to worry about in terms of, okay, well, what's the price of something else going to be when that, no, none of that exists. The futures price is the futures price. So why does that matter? Well, from a trade plan perspective, you just know exactly where the location of the asset is that you're going to get in. So for example, on a chart, if you're looking at a situation and you're saying, okay, well, I want to get in at that point. Well, that point is going to be based on the stock price itself. But what is the value of the options price going to be at, quote unquote, that point? Well, you don't know because of that blue arrow of the Greeks. There's no direct correlation there. But if you look at a chart and say, well, I want to get in at that price, well, that price is going to be the price of the future. Because like I said, there's nothing else. It's just the futures price. So let me show you what I mean with an actual trade. So this is an actual futures trade that I took. And the way that this is all working is I put in an order that said, I want to get filled at that red line right there. But here's the nice thing about futures is when I say I want to get filled, I know that I will literally be filled right at that area. Whereas if this was options, okay, yeah, I want to get filled at this quote unquote point on the chart. But what's the actual price and the value of the options going to be when the stock were to reach that point? You don't know because of those Greeks. And then also, I know that, quote unquote, this point right there, that green line is where I want to exit the trade. And if you're doing options, the quote unquote point where you want to exit the trade at, well, you just don't know what the exit point of the options will actually be because everything's getting messed up with the Greeks. So you have two prices in options. The asset price, or in options terminology, the underlying price, the underlying asset, which in our example is a stock, and then you're going to have the price and the value of the option itself. But what is the option going to be at that exact moment in time on the chart when, as I just showed you, I want to get in and then I want to get out? You don't know. It's a guessing game. It's not a black and white situation. But with futures, well, the price of the futures is the price of the futures. It's totally black and white. It is what it is. So in other words, there's just no questions here. I want to get in at that literal point on the chart, and I want to get out at that literal point on the chart. There's no questions about what the value of the thing that I'm trying to buy will be when the price is actually at that location on the chart. Because again, we're just looking at the futures and we're just trading the futures. So let's just show you how this trade played out. So again, I want to sell right there, get short, and then I want to get out right there. Depending on how new you are, get short means I want prices to go down. And believe it or not, yes, you can make money in the market when prices go down. That is known as shorting or going short. So that's what I want to see happen here. So I need the price to come down there, hit that red line. That will be where I enter the trade. And then I just need a quick little scalp for it to hit that green line, and I will be out of the trade. So you can see it's getting close. I'm in and out. And you can see right there, I don't know, what was that, maybe 4 seconds? A quick $60 in my pocket. But nothing fancy at all. I got in right where I wanted to get in, and I got out right where I wanted to get out based on the story that the chart was telling me. And to reiterate, this is not to say that therefore options are worthless, therefore options should not be paid attention to at all. Absolutely not. In these circumstances, those Greeks, very, very annoying. But in other situations with options, those Greeks, you can leverage them in your favor, and you can do all sorts of cool things with them. So this is not, like I said at the beginning, me saying avoid options at all costs. No, I've traded options, I trade options, options are fine. I'm just saying that as someone that's traded both, that is a very big difference. Is when you're looking at the chart of a stock, you can say, okay, well, when the stock is at that point, that would be a great entry. But if you're trading stock options, you just don't know what the value of the option is going to be when the stock is actually at that point on the chart. But because in futures, that point, it is what it is, well, then you'll know exactly where you can get out, where you can get in, and all of that, setting stop losses. You just have a direct correlation. Whereas with options, you have, again, that blue arrow, which is distorting things, and you don't have a black and white situation. So I hope that helps. And again, there are other differences. I'm not saying this is the only difference. I'm just saying that if you are, somebody that, is more of a scalper probably, then these things might, you might care about. Maybe it doesn't bother you. And that's fine too. But like I said, at the beginning of the video, it's going to be ultimately up to you. Does this difference even matter to you? If it doesn't, well then, at least now you know. But if you're maybe struggling and you're saying, yeah, options are kind of annoying because I identify all these nice patterns on the chart, but then I'm not quite sure what the value is, so I can never quite time up my entry with what the chart breakout or whatever is going on. Well then, yeah, I would say definitely consider futures. But also just to show that I'm trying to be totally unbiased and not push you one way or the other, I do offer free classes on both. So if you're interested in learning more about options and just giving yourself a good solid foundation, just comment below option class and I will link you to that. And I also offer a free futures class. So if you're interested in just getting a good foundation of what futures are, comment down below futures class and I will link you to that. So you go and trade whatever you think is going to be best for your approach and your strategy in the market. But I did want you to be aware that there is this big difference. And if you're saying, well, Clay, I'm just going to still do stocks. Well, all I will say to you is when I say pattern day trading rule, does that mean anything to you? If you're like, it does mean something to me, it's super annoying. Well, just here's a little carrot. Futures have no pattern day trading rule. So just keep that in mind. So that's all I have. If you have any other questions, anything like that, leave those down below. If you appreciate these videos, if you would like for me to continue to make this sort of content and you want to support the channel in a super easy and free way, if you could hit that subscribe button, I would really appreciate it. So thanks for watching and I hope this helps. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.